Unless you've been asleep for the last 2 months, you remember what happened around the Robinhood GameStop fiasco. It really proved to the market that retail investors as a group of market players are here to stay and have this huge amount of influence. Now the problem is there was never a great way to measure that kind of influence, but now there is. A new ETF called Buzz just started trading this week. Let's talk about it. B-U-Z-Z. Kinda gives it away, right? It sounds a bit buzzing. But Buzz ETF is a new ETF that invests in 75 different stocks based on an algorithm that analyzes millions and millions of social media posts, tweets, blogs, news articles, and then gives it criteria based on which ones are positive, negative, and then assigns those criteria scores, and then decides which 75 stocks to invest in. Now that sounds a little bit complicated, so let's look at this description page from Bloomberg here, which kind of details everything around this ETF. You see the ETF tracks the performance of the Buzz Next Gen Artificial Intelligence US Sentiment Leaders Index. Now that's a mouthful for an index, but effectively this is an index that started in December 2015. And if I just flip to this other chart for a second, you see that here you have a comparison between the performance of this index that the ETF tracks and the S&P 500 since early 2016, right? Right from the start when this index came in. And over the 4 years, from 2016 to 2020, the index outperformed the S&P by about 10 percentage points. But from April 2020, from really the worst point of the COVID crisis, when everybody suddenly stayed home, everybody got locked down, and so many retail investors really started focusing on the stock market, the index rose by 130% versus 55% on the S&P 500. So that's a huge outperformance based on these social media criteria. Back to this page here, you see the market cap at this point is close to $300 million, and that's only after 2 days of trading. This index started trading on Thursday this week, and I'm filming this on Saturday. You see the expense ratio is 0.75%, so for every $10,000 you would invest in this ETF, you would pay $75 in fees per year. And then flipping to what's actually inside this ETF right now, right? So we talked about 75 stocks, so this is the list of the first 20 or so with the biggest allocation. You see really household names here, from Ford, DraftKings, Twitter, Facebook, American Airlines, Amazon, Apple, AMD, Netflix, Tesla, Microsoft, Boeing, Plug Power, Zoom. I mean, the names that clearly are dominating the stock market right now and dominating the news feeds. All right, so now that we know how this ETF works, what kind of index it's tracking, and what kind of stocks are in it right now, let's talk for a second about how it actually works, right? Because anytime somebody comes to me and says, here's the product you can invest money in, it's all based on artificial intelligence, the selection is made for you by some kind of an AI engine, I actually really want to know how it works. So in the case of Buzz here, every single month we have a rebalancing that happens, right? And every single month we have these millions of unique data points that are collected across the spectrum of those social media posts, blogs, news articles, and they're filtered out. They're fed into a model that's using something called natural language processing technology, which effectively is a program that is designed to score and rank the amount of positive or negative mentions in all of these posts. And then it gives it scores and ranks it, right? So the ranking is happening based on the amount of positive sentiment that effectively all of these sources generate, and also how broad the discussion is, which kind of eliminates one single source kind of influence in the selection. It really has to be across a broad spectrum of sources. And then it selects, based on all of these rankings, it selects 75 stocks that will be included in that month's rebalancing. Again, based on all of these criteria, and each stock is given a maximum of 3% weighting in the ETF. So this is important because you want to have an ETF that's really well diversified and not taken over by some, one or two stocks or a group of stocks that really were flying high in all of these social media posts. Now, the question is, what kind of stocks actually qualify for the selection here? Because that's also important, right? You don't want to be influenced by some, high-flying penny stocks that somebody talks up on Twitter over a couple of weeks. So there's three different criteria here. First of all, in terms of size, right? So when it comes to size, it has to be at least a $5 billion market cap, and it has to trade on US major exchanges. Now, in terms of trading volume, the stock needs to be trading at least $1 million worth of daily average trading volume over a period of 3 months. So again, that assures that it's something that's actually trading actively. And then the third criteria is the degree of online mentions, right? When we kind of talk about the selections and how the model scores them, it has to be something that is consistent over a matter of weeks to months, something that is not, high flying for a month or for a week or two that really influences the selection. It has to be something that is much more consistent over time. So the question is, for example, back in January, AMC and GameStop, which were, again, back to what I was talking at the beginning of this video, the whole Robinhood saga fiasco, AMC and GameStop actually didn't make it in the index because they failed one of these criteria. So it's really trying to assure that you're taking something that is not going to be an outlier, that is something that's more consistent, that is actually worthy of an investment. Again, back to the chart in the beginning of the video, you saw the outperformance over the S&P 500. And so to a certain degree, this is a bit of a momentum strategy, right? It's trying to catch on a momentum that's happening, that's being talked about in social media, but it's not necessarily just the high flyers, the stocks that are reaching new highs. For example, Delta or Boeing or Carnival, stocks that were massively depressed over the last 12 months, they were included in the index. Because again, all of these posts and social media mentions, they talk about how much value suddenly these stocks have and how they will again come back, right, once we ride out of COVID-19. So it's both sides of the spectrum, obviously, but again, a broad selection here and criteria that seem to be making sense to me. So now the real question is, should you be investing in this ETF? So look, first of all, this is the second time that an ETF of this kind is hitting the market. The first one was back in 2016. It never really took off. It only collected about $9 million in terms of assets and then was delisted in 2019. But in the case of Buzz here, we are off to a much better start already. In 2 days of trading, we're at close to $300 million in terms of assets under management. But also the conversation, a lot of the idea sharing, the way we talk about investments, the retail community is becoming really powerful and present in online. And so the amount of data points, the amount of sources that are being fed into these engines, number one, is just so much higher, but also the quality of these posts and how the discussion evolves is just better, right? There's just more analysis, more informed opinions. So this is improving the analysis of the AI engine that's analyzing all of this. So look, on one hand, you're clearly adding something to your portfolio that is a bit high octane, momentum, volatility type of a strategy, not very academic, right? We're not analyzing cash flows and talking about PE ratios. We're talking about what people talk about online. But on the other hand, a lot of the conversations, a lot of the analysis has really moved online. It's really in the public space. Kathy Wood's ARK is sharing all the research online. Everything's just out there. And this is clearly how the new generation of investors is demanding attention. And we have seen it in the absolute thrashing of the hedge funds back in January when, they just had to capitulate in the face of the strength of the retail investors, and had to stop out of GameStop and AMC. So should you buy this ETF? Should you have it in your portfolio? I think this ETF has a lot going for it. I certainly have it in mine, and so does Dave Portnoy. Alright, that's it for a quick update on a new ETF called Buzz. Make sure you like the video, hit the subscribe button if you haven't yet, and I'll see you in a few days.